Robert, when we do calendar spreads for earnings, what we are really looking to do is take advantage of the big disparity in volatility. Certainly some movement also towards the short strike, but it really is more about the volatility than it is the movement. When we do calendar spreads that are non-earnings related and we're looking for, a little bit more of a methodical move towards a strike, then it's really closer to what you just said. Okay, let's look at IBM. TJ, I don't ever recall looking at it, so we can. Stock is 142.5. What is the expected move here, guys? Good. Good. It's right about $6. How do we calculate that when we're not sitting at a strike? We're actually sitting right in between strikes right now. Okay, but that's my point. We don't have an at-the-money straddle right now. Right? We're right in between strikes. So the 142 straddle, there you go, Gary, you got it. The 142 straddle is $6. The 143 straddle is $5.85. Okay, so if we take that, and Alan, just like you just said right there, if we take that, it's $11.85 divided by 2, which gives us about $5.93. Okay, so then our expected range off of that is going to be 136.60-ish up to 148.40-ish. TJ, what's that? Randy, we're using the midpoint, the theoretical value, the midpoint. TJ, what is that? WB says IBM. What does that mean? We're talking about IBM right now. We're not talking about CCI. I said I would get CCI up on the board, but we're talking about IBM right now. Okay, let's take a look at an IBM chart. Okay, so from a volume standpoint, there's going to be some resistance right here. There's definitely going to be some resistance right here around 144 half-ish, which is also the peak that we saw here back in April. Okay, now, if it does break through here, there's a lot of room to go before there's any sort of resistance. But that 144.5 resistance is going to be pretty decent. In terms of support, I don't know, you got the 50-day here at 136, and then the 200-day down at 133. I'd be more keyed in on this resistance right here than anything else. Okay, so let me get the notes here. Resistance at about 144.5, and that support area, that 50-day moving average, comes right in line with the 50-day moving average, which is right at the expected range. Randy, we look for technical indicators. We look for the 50 and 200-day moving average. We look for big volumes. So this big yellow line here, that's an indicator as well. Okay, stocks they're like magnets. They like to trade towards those areas, and then they become support and resistance. You can also see this high right here at 145 and change back in April, and the stock really bounced down hard off of that. That's going to be resistance. What happened July 2017? This chart doesn't go back that far, but I can... Nor does this one. I have to look to see on a bigger chart, Russell. If it breaks above that resistance, then yes, that prior resistance could become support then. Not automatic, but that is correct. Okay, so let's take a look at this now. I'm from the charts here actually pretty bearish in IBM, but let's price out an iron condor first here. And I'm just going to go right to the strikes of the expected move first, and then we can kind of adjust from there. Okay, so the 137, 135, and 147, 149 iron condor. It's only about 85 cents, which obviously reward to risk is not great. Break evens on that also would be 136.15 up to 147.85. So good to the downside, not so great on the upside, which is fine because I want to be a little bit bearish anyway. But I don't love this. The reward to risk on this, like Michael just said, is awful. It's 0.74 to 1. Okay, however, what if we adjust this to make this a little bit more bearish? Okay, all I did here was lower the call side strikes one strike each. And now this puts us real close to where we want to be. This is the first earnings with Red Hat, you're right. So the 137, 135, and 146, 148 Iron Condor. Let's say we could get a buck for that, which is right where we want an Iron Condor to be. Right? 1-to-1 reward to risk. We would look at that and say, wow, this is great. But what we have to take into consideration is the break even. Are we willing to accept the 147 break even with an expected move up to 148 and change? Personally, I am, because I'm bearish. Okay? I think this is good opportunity. Now, that doesn't mean that we just want to go ahead with this. I mean, if we're bearish, and I do like a bearish setup here, there are other things we can look at. We can look at just a straight put vertical. We can look at a put calendar if volatility made sense to do that. But this Iron Condor, which has a bit of a bearish bias to it, looks pretty good. Okay, everybody understanding what I mean with the bearish bias here? Well, Robert, I don't mind that down there at all, because even though I'm bearish, again, if I look at those charts, there's a lot of support in that 136 area. So I'm good with that. Okay, but let's just take a look at a calendar here, at a put calendar. Okay, and we can even go down. You know, one was a 136.5 or so was the expected range. Okay, let's go right to 136. I'm just scared of what next week's volatility is, that's all. So that thing probably costs us about 15 cents. It's not bad. That put calendar is not bad at all. What I'm going to do here, guys, is I'm going to go off the mic for a little bit, but you're going to see me just kind of monkeying around with different strikes. Okay? And playing around with different strikes to see the reward to risk. And I'll put this all on a chart together, the different comparisons, and we can look at it all on one chart together to see which may be the best opportunity. All right, so I'm going to go off the mic for a couple minutes while I'm doing this, and I'll come back on when I have everything put together here.